Hello viewers, so in this video we'll be looking at the result of Ashok Leyland. So without further ado, let's start. See, in this video we'll be using two websites. First is tickertab.in and second is screener.in. So this will be a combo video where you will get used to these websites, you will know how they function and which one is better, and also a combo video about the screens review and also the fundamental analysis of Ashok Leyland. So here if you scroll down you can see the quarterly result, and we'll start with the quarterly result of Ashok Leyland. So March 2020 the quarterly result is 18 crore. This is the net profit. If you compare it with the last quarter 27, it was 27 crore. So in terms of percentage it is 33% down. March 2020 result is 33% down compared to December 2019 quarter, and we all know why this has happened. It was due to the lockdown because of the COVID-19, but not only the COVID-19 situation. Before that, before COVID-19 occurred, before lockdown occurred, the results, the profit figures, the sales were hampered of the whole motor industry. These car manufacturing companies, these were getting affected due to some international affairs. Exports were hammered, raw material cost was increased. So all in all there were several factors which are impacting this motor industry, and we can say that COVID-19 has added an extra burden on these companies. Now if we compare March 2020 result with March 2019 result, then it was 713 crore rupees and now it is only 18 crore. So you can see how much problem, how much burden they have faced, because their sales have lowered down. If you see here, on March 2019 the sales was somewhere around 9,800 crore, and March 2020 it is 5,088 crore. So almost 50%. Let's get to the exact figure. %, right, to be precise. The results, the sales are down by 48% on year basis. Also the operating profit margin, if you see here, on March 2019 it was 15% and now it has gone down by 14%. So this is a huge impact on not only Ashok Leyland but Eicher Motors, Tata Motors, Hero MotoCorp, Maruti Suzuki. All these companies are facing this kind of problem. So let's move on now. This was about the quarterly result. If you have any questions regarding this, you can ask me in the comments. So for yearly results we'll be using tickertab.in. This is also a simple website, but the beginners who are new to the market, they might find this website somewhat complicated due to huge numbers, formulas and jargons. So compared to screener, this is somewhat complicated, but once you get used to it, you get familiar with the market and these terms, then of course you will love this website. So let's move on. See, now we are talking about the yearly results of Ashok Leyland. So yearly results, it is here shown that the net income, which is also called as net profit, is 336 crore rupees, and in FY 2019, that is last year, it was 2078 crore rupees. So in terms of percentage, let's calculate it, and to teach you how do you calculate it, for those who don't know, you just subtract the current profit with the last year profit. This is 1742 crore rupees difference, and you divide it by the previous year's profit multiplied by 100. So the result is 83% down. Okay, FY 2020 result compared to FY 2019, it is 83% down, which is a huge gap, a huge difference. Earning per share has also declined. It was 7.08 and now it is only 1.14. So this was about the results. Now let's have a look at balance sheet. So this is the consolidated statement, consolidated balance sheet, and here you scroll down in the equities and liabilities section. Non-current liabilities, which is also called as long-term liabilities. The major part here is the borrowing, the debt, and if you look here, then the debt is 3,308 crore rupees. So the long-term debt is 13,308. Sorry, I said 3,000 earlier. So it is 13,308 crore rupees. Let's zoom in here. And the current liabilities, which are also called as short-term liabilities, then the borrowings. Borrowings is synonymous to debt. Okay, you should remember this. So it is 2,842. So if we just total it, then 13,308 crore plus 2,842 crore. So the total amount of debt on Ashok Leyland is 16,150 crore, and the yearly result, the yearly profit is only 336 crore. Now if we were to assume that the profit assumption, okay, if we were to assume that the profit of the company remains stagnant, remains same, it neither goes up nor higher for the next years, then how much time will it take to recover this debt? So what we have to do is we just divide it by 336 crore rupees, which is the net profit, and enter. So 48 years it will take to recover this debt, only to repay this debt. 48 years. Also, if you look at the market capitalization of Ashok Leyland, see, the market capitalization of Ashok Leyland is 15,690 crore, which means if you want to buy 100 shares, all the 100% shares of this company, if you want to buy this company, if you want to buy all the shares of this company, then you will have to pay 15,690 crore. So what you do is you pay 15,690 crore, you get 100% shares of Ashok Leyland, and with that you get 16,000 crore of debt. So you get 31,690 crore. So you have a liability, you don't have profit, which is a wrong sign, you know. And we can also subtract this with the cash, with investments and all, but that is an extensive research. It will take a lot of time, but I am just giving you an overview that how you should analyze the company, how you should look at the company, that you are paying 15,000 crore rupees, you are buying that company, and you are getting extra 16,000 debt on it. So instead of ownership of asset, you are awarded with liabilities. So that's how you should analyze the company. Now we have seen about the profit, we have seen about the balance sheet, and now the concern here is, will the Ashok Leyland recover from this problem? Will Ashok Leyland get back on track as earlier as possible? So here is the recent step taken by the company. They have raised bonds, rupees 200 crore rupees bond they have issued. I mean, they are about to issue, they haven't yet. So they are going to issue 200 crore bonds, means they will give bonds to the bondholders, and in return they will get 200 crore. So this is also form of a debt. So again, this is not a good sign. any company which needs consistent debt only to sustain its business, then it is not a great sign, because the IPO, if you look at it here, maximum chart, so this company has been in business from 1st April 2005. We are talking about the IPO when it listed on the exchange, right? So from 2005 to 2020, almost 15 years have been passed, and this company is still dependent on debt. They have to keep getting more and more debt to stay in the business. So this is not the kind of business which a sensible investor should want to invest in. You see here, if you look at the yearly figures, so from 2014, the borrowings, the debt, it was 8,500 crore, then 9,000, then 11,000, then 13, then it was reduced on March 2009, not reduced, again increased by 2,000 crore, and again on March 2019 it is 19,168 crore, and now we calculated it here on March 20, it is 13,300, and if you calculate all these lease liabilities and financial liabilities, then it is 14,436 crore debt. So you see, they are not producing enough profit, enough cash to stay in the business. Whatever they are producing, whatever profit they are generating, is given to the bondholders, it is given to the banks, and a small amount, a very minuscule amount, is given to the shareholder in form of dividend and in form of stock appreciation. So as a shareholder, you should always look at the opportunity cost. See, if you look at the peers here, then it is Tata Motor, Force Motor, these are the major competitors. And in the motor industry, the best company right now is Eicher Motors. It has great profitability, strong book value, better return on equity, dividend yield is so, sales growth is also great. So this kind of company, and I am just comparing Eicher with Ashok Leyland. Okay, right now we are comparing two stocks, only two stocks. So compared to Eicher Motor, Ashok Leyland is weak, very much weak. So if you want to invest only in the motor sector, you want a motor stock in your portfolio, then that should be Eicher Motor, because they have great profitability, improving OPMs, and right now what you see here is because of the recent turmoil in the automotive sector. But this company has a great track record of turnaround. They have less debt, they have huge cash. You can see here, see the borrowings is only 249 crore, and Ashok Leyland had 13,000 something, 14,000 something crore rupees borrowing. So you can see the difference here. Just by looking at the balance sheet, you can see that it is strong or weak. Here investments, the investment, the cash position is huge, 5,749. So this company has that ability to surpass itself, to recover itself from any major financial situation. So only with comparison, Ashok Leyland or Eicher Motor, then Eicher Motor is a great choice. But again, there are 5,000 stocks in the Indian stock market, 5,000 plus. So there is always an opportunity cost. You don't have to buy a motor company or an airline company or a hotel company. All you need is a great interest on your portfolio. You need to be able to generate a consistent and greater return than the market or saving account or bond. So opportunity cost is the one thing which you should always consider. It is like considering whether you want to buy a car or a tractor or helicopter, and if you are getting car and tractor at the same price, then what will you prefer? Of course, you will prefer a car if you want to travel at long distances. They have different uses. Or if you are getting a bike and a car at the same price. So that's what opportunity cost is, right? What you get, what you pay, and compared to what you lose. So always consider this opportunity cost, which one is beneficial for you. Buy that. Don't just invest because you want to own that stock. You want to have ownership in Ashok Leyland, you want to have ownership in some airline industry. No, don't do that. Always consider your opportunity cost. Always consider the best possible investment. Now, what about the performance of Ashok Leyland for those who have bought? Would I recommend them to sell? Well, it is a very, how to say, a personal opinion. Unless I know what price you have bought, how much quantity you have bought, how much of your wealth is invested in Ashok Leyland, it would be very it won't be right for me to comment on that, whether you should buy, hold, or sell. So I'll just look at its progress, how it has done, how it has worked, and how it will perform. So let's look at Ashok Leyland share. So the stock has closed, it is not closed right now, it is trading at 52.45 rupees. And if you look at its 1 month, 6 month chart, then on 6 month basis it has fallen down by 32%, and on 1 month basis it has risen by 20.44%. So you can see here again that the stock is moving based on demand and supply. If more people want to buy, then the stock rises. If more people want to sell, then the stock falls. And if you compare at the result, at the fundamentals, then they have not really changed. The fundamentals of the company don't really change on daily basis. Yet the stock of that company changes every day, every second, every minute. So the stock movement is controlled by emotions, but the fundamentals of the business are controlled by numbers. So it depends what you want to listen to. You want to listen to the emotions of people, or you want to go by the traditional route of obeying the numbers, understanding the numbers. So for me to comment whether this stock will go up or down is very difficult, and not only for me, most of the people who give you those target in the YouTube videos that the stock will rise to 50, 60, 70, I think they are fooling you, or they are fooling themselves. Do not ever try to time the market. Just buy the stock if you think that it is a sound business, it will be profitable in the next 5 or 10 years, and hold it as long as you think that it is profitable and it's going to make money. So what do I think about Ashok Leyland? I just said Ashok Leyland in long term is not great, not good compared to the opportunity cost. If I were to get two companies, then I would rather buy Eicher Motors than Ashok Leyland, but only in the motor sector. If I have to look in the 5,000 basket of that whole 5,000 Indian stocks basket, then I would pick only 2 or 3 stocks instead of buying each company from each sector. That's not really a great idea, because all I want is a strong return on my portfolio. So of course this company will recover, this company will generate better profit, it will try to minimize its debt, but considering the opportunity cost, I would say that avoid Ashok Leyland at current levels. So that's it. That was my conclusion. It depends what you think about its future, because in the end it is your money, it's your responsibility. So that's it. See you in the next video. Thank you.